Good afternoon. Nice to have an obscure topic like this one today. Well, trust is just a slight issue at the moment. Unfortunately, we have the CEO of Elliptic, Simone Mani, and the CCO of BitGo up here, Jeff Horowitz. So thank you for your time here. First question here, sort of the obvious one. Clearly, trust and safety in digital assets. Well, what are the key lessons here to take away from the FTX, I guess slight issue or debacle, whatever you want to call it? Anybody want to speak on that?
Sure. So one thing front and center is we need to have a better regulatory framework in which to operate. One of the things that was apparent in the FTX collapse this week is that there's not an independent regulated custodian that's in charge of those assets, right? Those assets were live on an exchange with an affiliated company, and that leaves the opportunity for fraud or poor risk management. In the United States, we do have some trust companies and banks that are regulated custodians, have a full obligation to segregate those assets, make sure they're fully accounted for. And that's a model we need to start to embrace and pursue and make that part of the regulatory framework, just like it is in the traditional markets.
And I think you mentioned the word trust. I can't count the number of times I've heard the word trust and the word transparency in the last few days. Clearly, we have a job as an industry to restore trust. And Jeff talked a little bit there about regulation, and we're going to hear an awful lot more about that. I thought we're on a panel talking about reputation, trust, and regulation, and we would probably have standing room only like CZ had this morning, because this is really the topic that the crypto industry needs to lean into at this point. We are going to have to meet the regulators where they are. They're going to have to move towards us a little bit as well, but the crypto industry needs to do a little bit of introspection now and really think about how we want to embrace regulation, how we speak with one voice as an industry. It's no good for us to be sort of taking different approaches and putting companies above the industry. We have to take an industry-first response and let the regulators hear with one voice from crypto what we think is needed.
Now CZ has spoken of the need for proof of reserves. Is that in itself something you advise for? Is that sufficient? Is there more? What's your take?
Yeah, we've been doing proof of reserves, I think, since 2014, 2015. It's a good start, right? But I think you also need credible regulators and auditors to come in and actually examine those books. Coinbase is a publicly traded company. Their financials are out there every quarter, right? We need that transparency in the market, and I think that's what's lacking. And proof of reserves is a good first step. It's probably going to need more than just that. Because some of this activity still happens, off balance sheet, right? There's stuff that you can do on the blockchain and review, but we need a totality of transparency.
And this isn't anything different to what's been happening in the traditional banking industry for some time. Companies like Coinbase, publicly traded company, their balance sheet is out there for everybody to see. As Jeff said, BitGo have been doing this kind of thing for a long time. Proof of reserves is a great step forward and also highlights how transparent blockchain-enabled assets can be. We can see all the movements. We can see what's happening. So let's really use that feature to our advantage. But we are going to have to go much further than that as well.
Such as?
Well, as I said, we're going to have to really look at what the regulatory options are going to be. I mean, there's already a lot of talk around stable coins. It'll be interesting to see what comes out of the US Congress in particular around that. DeFi is another area where we can't resist having regulation of financial innovations. We have to collaborate and be creative with that.
You spoke about the need for a common voice and sort of getting ahead of the regulatory curve. That's sort of like in the wake of the financial crisis, 2008. The industry sort of TradFi. There are members of the TradFi community who sort of fought that regulatory you know, and you know, sort of, you know, push back on things that would prevent a you know, a succeeding crisis. I would argue that the TradFi is still ripe for that type of crisis again because of those efforts. You're saying we should take a different take where the industry actually sort of embraces, you know, the proper regulatory response before it's forced on you. Is that?
Yeah, I think the industry could do a better job ourselves. You know, we have a number of lobbyist organizations in the U.S., like Blockchain Association, a Blockchain Alliance. What we don't have is a SIFMA, which is a very powerful force in the traditional finance industry. You know, before a new rule comes out by the SEC or FINRA, they meet with SIFMA. SIFMA gives them comments and helps shape that regulation. We need to do a better job at informing regulators. What are the risks? What are the opportunities? How do we move forward in a sensible way? And I think we have too many factions focusing on what's their business model versus what's the best business model for the crypto ecosystem.
Yeah, we do have an opportunity here. I think if we can see it as an opportunity, then we're going to come out of the other side of this stronger. We're probably going to take a step back now while everyone retrenches, while the regulators look really carefully at what needs to happen. But I think that puts us in a position to actually take two bigger leaps forward in the long run, which is net going to be better for everybody that has been in the crypto ecosystem building it for so long.
Jeff, you were going to say something?
No.
Oh, okay. Now you're talking about the industry coming forward, you know, basically embracing a proper regulatory stance. But right now, sort of, you know, it's being done. Oh, sorry. Sorry about that. Not being, is the regulatory, right now it's sort of different fiefdoms around the world, the regulatory system. So if you want, you know, you're talking about the industry speaking with one voice, you know, it can't just be CZ or whomever, it's got to be the industry, but at the same time it's like right now you've got, you know, the chance for regulatory piecemeal around the world. So are you arguing for global regulation? Is that what you'd like to see, or?
So the holy grail here would be a consistent global regulatory framework. And certainly part of why we're here talking about this is because of this balkanization of regulation, you know, regulatory arbitrage. We hear people talking about it all the time. And you know, one of the main ways that we can address that is having a global, consistent regulatory framework. We have to challenge ourselves, though, on whether that's realistic. You know, we can aspire to it, certainly, and we should aspire to it. You know, the FATF has already done a great job of that on AML risk, but we don't necessarily have someone looking at the risks in crypto outside of AML at a global, supranational level. I think we need to, well, the hope would certainly be that we can see that development. I think it's going to be a long time coming, though, to get that level of coordination. And so in the meantime, what we need to hope for is that on a national level, the regulators now move fast. Because if they don't move fast, we will continue to see good businesses look at jurisdictions where there is a clear regulatory framework, and go there to establish themselves.
Yeah, I agree with Simone. FATF is a great start to set the global AML standards, but it's just a guideline. It's a standard. Countries that need to adopt their own regs and rules. But we've been looking at the FATF in traditional finance and crypto for years. That's a good first start. But you know, I met with the chairman of ADGM yesterday, and we talked about what's the right regulatory framework. And he had a great perspective. He's looking at is what are the risks, and let me write the regulations and the framework to address those risks, rather than spend another year or 2 years defining what crypto is, like we're doing in the US. Is it a security? Is it a commodity? Who's going to regulate it and fighting over it? And we've had a number of bankruptcies while we're waiting for regulation. So if the time wasn't yesterday, it's now, right, to fix this, because in the US we're focused on enforcement actions to give regulatory guidance. But that's a little too late, right? The investors are harmed, the consumers are harmed. Maybe somebody will go to jail, but that doesn't help the guy who had their funds locked up at FTX. So this is the time that I think as a global ecosystem, we need to come up with what are the 5 key principles. How do we adopt that? They may be a little different in different jurisdictions, but the concept should be the same about safety, about trust in digital assets and in the ecosystem.
Strong regulation breeds success. We've seen that in the traditional financial markets. I'm not saying that we should have exactly the same regulatory framework. That doesn't necessarily apply to crypto, but the fact of the matter is that having strong regulatory frameworks leads to trust, trust leads to success, and that's what we should be talking about as an industry.
As an industry, that's sort of the key point, because probably the most visible person in crypto in Washington up until recently, actually still the most visible person in Washington in crypto, was a gentleman by the name of Sam Bankman-Fried. Some of you may have heard of. So that's sort of the danger of just having one person out there as the face of crypto. So is there any move that you're aware of sort of to create that unified voice?
There have been fits and starts, in the U.S. and a number of the global exchanges, and the leaders in the U.S. have been trying to get that voice heard, but unsuccessful, right? The regulators have come in and meet with us. Let's have those discussions. They really haven't come to fruition of a good way forward. But I think there's an Oedipus now that we need to come together, and whether those are, BitGos and Coinbases and CZ and Binance, to come up with something for the institutions to get excited about this space, right? I think they're only really going to come when there's an equivalency of regulation. They're used to federal regulation or national regulation, not quasi-regulation. So I think it's really up to us as the major players, either as exchanges or custodians, or on the surveillance side, to come together and work with global regulators, right? We're regulating the US and Switzerland and Germany and maybe here in ADGM because there was a forward framework, but we need to make that a reality rather than discussion.
Changing gears a little bit, so a lot of the major takedowns in crypto have been, Celsius, Voyager, and of course, the SBF. So the question is that those are sometimes labeled as CeFi, centralized finance, as opposed to decentralized. And does the regulatory world, particularly the U.S., have the sophistication to differentiate between the two?
Not yet. I think some of the DeFi protocols actually worked, right? The smart contracts executed when they were supposed to. But I think it's very hard to require good risk management when you have bad actors, right? So when we're concentrating some of these assets under a few centralized exchanges that don't have a regulatory framework and are not accountable, we're going to run into these crises. So I think there's room for both CeFi and DeFi, but we need to put a framework around it to protect the investors and the consumers. And the industry can do it themselves. We can have the right risk disclaimers and disclosures. We don't need to call everything a security to file a rule map. But there will be good actors, there'll be bad actors. And we need to figure out who's who.
So, sorry.
To your question, Kevin, DeFi has got a great opportunity now, given what obviously the focus on CeFi and maybe some of the failings around that. And just in the recent weeks, we're talking a lot about the negatives, but there's been a huge amount of positive, particularly around DeFi in the last few weeks. DBS, Bank, JP Morgan, have both executed trades on DeFi. I mean, that's huge. That's to leading national, well-regulated financial institutions innovating and experimenting with this technology. So I think DeFi has got a really bright future. But again, we either collaborate and work together on developing proper oversight for things like those financial innovations, or we wait for inappropriate regulation to come down and sort of squash that potential.
Like I said, in the wake of the financial crisis, you had industry, which had basically, had almost destroyed the U.S. economy. Thank you very much. Basically fighting against regulations that would prevent it from reoccurring. So you're basically saying that the crypto people have to be sort of more mature and forward-looking, and actually just, take for the good of the industry, be more mature than TradFi. How likely is that?
I think maturity is a great word for it. And, for those of us that have been in this industry for a really long time, we have to go back to, the original vision of all of this. Why are we even here? Why do we think that crypto assets, why do we think that blockchains are so powerful? We have to really go back to that vision and think about what our mission is in this space. And if we want to protect that, if we want it to achieve its potential, then we have to step up and demonstrate that maturity. I don't know that there's anyone in here that would disagree with the fact that as a community, it's our responsibility now to put ourselves in the limelight and say, we can do this. There are no shortcuts to creating a serious financial ecosystem. So that's what we have to do.
You talked about DeFi. To get to DeFi back again, you talked about how it has a moment to shine, but at the same time, as you better than anyone knows, the amount of hacks, sort of overshadowed by everything that's been going on. The amount of hacks hit, I think, an all-time high in October. What does that mean?
Certainly the case that, certainly the case that DeFi protocols, DEXs, have had their fair share of bad news coverage in the last couple of months. With the advent of things like cross-chain bridges, and bridges facilitate interoperability between different blockchains, that's something that's incredibly positive for crypto. It makes usability that much better, but they're in their infancy. We should expect that there's going to be some level of vulnerabilities that are discovered and that are taken advantage of. That's the case in any emerging innovation, emerging technology. What I think we should really focus on is the fact that we can see them, we can report on them, we can track where the funds are going. Those are characteristics of the blockchain which are part of what makes it so powerful. At Elliptic, we have been tracing the fact that the Lazarus Group, which is associated with North Korea, has been laundering proceeds of things like ransomware attacks through the Ren bridge. The very fact that we can see that, we can label and identify that criminal activity, put it in our tooling so the likes of BitGo and other highly compliant players in the space can immediately make sure that there's no off-ramp for that crypto, is something that we should be celebrating. We should be shouting it from the rooftops, because you can't do that in traditional finance.
No, understood that you're able to identify bad actors very much quicker than you can in TradFi, but that's small comfort to the investor who winds up losing money due to a hack, due to an exploit. So, when you're talking about bringing TradFi stuff into here, is something like, you need to, believe it or not, my dry cleaner, when I was picking up this jacket on last Friday, was telling me how her sister's is in a fight with her husband because he insisted they put all their money in crypto, and it was $250,000, and it's gone, and they're fighting all the time now. Okay, the fact that you can track the actors and things like that really doesn't do much. I mean, do you need something like, do you need something like insurance for deposits? Do you need things like that to make this because it's like, say, oh, okay, you lost your money, but look, we can track it. Who cares?
Well, I think that was one of the first hurdles in the crypto ecosystem, right? Is it only used by bad actors? And is it only going to be used by, money launderers? And, through blockchain analytics and companies like Elliptic, we've been able to dispel that myth. And now, we've put that somewhat behind, that it's not just for bad actors. And what else can it do? We were talking earlier how, in the first block of Bitcoin, right, Satoshi mentioned the financial crisis. We've now created our own crypto financial crisis. So if we actually move the ball forward yet, I don't know. We may take 2 steps back, but I think if collectively we can figure out how to actually make the system safer and actually achieve what the goal of crypto was originally, which was bring more people into the economy, make it faster and more efficient, and cut out some of the intermediaries. We need some more adults in the room who've lived through long-term capital and Lehman and the financial crisis and the dot-com, so that we don't repeat the same mistakes, right? I think we have an opportunity to do finance 2.0 and make it better. I think we've taken a step back and kind of created some of the same problems that got us here. But if we come back to the vision of a different way to look at finance, hopefully we can achieve it. And I think the first step is setting some ground rules and some regulations so that your dry cleaner doesn't get sucked in on some crazy crypto coin that may not be worth anything versus keeping it in traditional markets. There's room for both of us, and we want to make crypto a traditional marketplace.
I mean, those are the individuals that we should all be feeling, a deep sense of sadness and responsibility towards. And not one of these individual initiatives, solutions, is a panacea to the problems that we're facing. We're going to have to tackle each one of these, whether it's transparency and traceability for anti-money laundering purposes, whether it's consumer protection regulation. I mean, I really hope that we see some regulation around that coming very quickly. CZ talked a little bit this morning about education, and I couldn't agree with him more. We need to do better as an industry educating participants so they understand what they're getting into. As I said, DeFi, on the maturity curve is really early. Most people shouldn't be investing in DeFi yet unless they really understand how a smart contract is working.
Something like where you have to have the sophisticated investor, something like that thing for it.
Yeah, whether we look at the accredited investor marketplace for some of this, but to your point about hacks, I think as an industry we've grown so quickly that we haven't spent all the time on the cybersecurity controls and on what's the proper custodial storage, whether that's cold storage, right, or single point of failures. We implemented and pioneered multi-sig, right? So there's not one actor who can move assets. It takes shards and multiple people and in multiple jurisdictions, right? We need to get back to pure safety, and I think we have too many vulnerabilities between cross-chain capabilities that we haven't really thought through how to make it safe, and I think we need to take a step back and kind of secure the ecosystem.
Accredited investor worries me though, because one of the things that we are also excited about in crypto is that there are no barriers to entry. It's sort of democratizing access to finance, and so we have to have a balanced approach. There should be consumer protection, there should be more education, but we shouldn't put lots of barriers in place that stop people that do want to come into the space, do want to experiment, from being able to access those technologies, those types of assets. That, I think, would be really damaging and is straying pretty far away from the original vision.
Well, as far as the original vision goes, I think sort of the original vision has been really hampered here. I mean, the original vision was very, very much, crypto, let's do whatever we want to, let's break it, let's break things fast, let's, et cetera. And look sort of where it got us. And you're talking about bringing the grown-ups into the room. Sort of that spirit of crypto, it's going to have to mature a lot if we're going to move past this. You're going to have to have elements of TradFi coming in. The question is it going to be, is so much going to come in if the industry doesn't regulate itself? Adults who don't know about crypto are going to come in and basically just potentially kill it.
Yeah, run fast and break is not the model when you're entrusted with billions of people's assets, large institutions coming in. In the early days, and it was a little peer-to-peer, and Bitcoin was at $200, it didn't mean as much. But when we're $1 trillion in a $2 trillion industry, it does. And I think there's an opportunity to take the good aspects of Finance 1.0 and create Finance 3.0, because Finance 2.0, we've had some problems here. So I think we need to figure out how do we adopt the best of both. Some of that is safety and security. Some of that is privacy controls, right? I think people got into crypto because they want some privacy, and that should be their right. And through blockchain analytics, you have some privacy, but you're also traceable. And law enforcement loves the ability for us to trace this. The $20 bill on a street corner, not as traceable as blockchain. So when I talk to law enforcement, they don't want crypto to die. They love the cases that they can bring because of the transparency. But we need the same transparency and trust on where your assets are, who's marketing these new tokens and coins, what are the use cases, and it's up to us to educate the investors and to work collaboratively with the regulators to come up with the right framework. And we've been pushing the US and they've been sitting on the sidelines and not being a leader, and there are other countries who are, but I think the best way is a global response, because there will always be the actor that goes to the path of least resistance, find the place where there aren't any checks and balances, and that's going to blow up again. So it's really up to us as industry leaders and to work with our partners, the regulators.
But that, of course, is going to require the global, a global industry response, which we don't have yet.
I think we need to do it, and I think whether it's folks like CZ and Brian and Mike and others who get a collective voice. I think we've had too many factions of what business model makes sense for them. I think if we need the whole ecosystem to survive and grow, we need to put down those business model discussions and just work on a framework. And I don't think there's a horse of what country leads, but we need a leader.
Am I out of time? Yes, I am? Oh, okay. They're bringing the hook up to get me off the stage. Just final thing. We thought we were in winter. It turns out that it was just an early, an early fall frost, and now nuclear winter's begun. When do you see spring?
I've lived through 3 winters, in my, almost 5 years in this space. I'm looking forward to summer. I think it's going to take, a step back, and we've had a step back. But I think the institutions now see the risk and also see the opportunity to come in and make it safer. So I'm really hoping 9 months, 12 months down the road, we'll actually have pen to paper on the best way forward.
I think it really depends on the speed with which we and the regulators can really come to the table. Unlike Jeff, I'm not going to put a number of months on it. I really hope that it's within 12 months, but we need to see some legislative action happening quickly.
Okay, thank you, everybody. Thank you.